Hello, everyone. Welcome to the Pro Trade Room Plus and Empire State Manufacturing. My name is Lee Goldstein, the Trading Director at 10 Minute Trades. Please remember that all the trades we discuss are for educational purposes. I'm not a financial advisor, so please trade carefully. Okay, everybody, I just wanted to give you an idea what's going on with Empire State. So Empire State is also trading with import and export pricing, which is not the norm. Um, they're both medium level reports. So look, here's the deal. Sometimes when we do our testing at the last minute, things could come up that will determine ultimately what your decision is going to be in the trade room and where the risk. It's all about risk, right? It's all about, is there a good opportunity to make money on a report, or is it unknown? Is it a bad opportunity? We have all sorts of things that come into play that are going to affect whether or not you want to trade with normal risk, with less risk, or with no risk. So how would I qualify risk? The word normal is probably almost impossible to quantify because really there is no normal. But suffice it to say, when we're looking at futures, we could have normal, and we could consider normal risk trading with full size contracts. That's what I would consider normal risk and an opportunity for good profit. All right. So let's qualify that as normal risk. Unknown risk is when no matter how hard you try, you can't come up with enough testing to give you a real answer as to how you should trade an event. And look, I want to be honest, I really thought that Empire State was going to be normal risk, but when getting down to the brass tacks of testing, grassroots, brass tacks, English language can be very confusing. And before I forget, I do want to welcome everyone to our streaming. I don't know if you can see our streaming because I don't think I ever started it. Now you can see the streaming, so forgive me. I want to welcome everybody to our stream. Thank you for coming. I apologize. I did not start the stream properly. So we are now here for Empire State Manufacturing, talking about risk. So normal risk would be you have 3 or 4 months in a row of testing on New York Empire State Manufacturing, and it trades the same way. In other words, it either trades with import export pricing all the time or it doesn't. So we have a situation where Empire State today is trading with a report that it doesn't usually trade with. And when I went back and really got into all the testing, I realized that August and June, we can't even use the testing because retail sales were trading with Empire State. Empire State gets completely ignored when retail sales is part of the equation because retail sales is so much more important. So, look, we're not here to mince words, to dance around risk. We're here to very seriously be honest and transparent. So, let me just show you a couple of things. I mean, I don't think that for the average trader, if you want to build your account, it's not so much that Empire State Manufacturing is a super volatile, ultra risky report, but we don't have the testing that tells me what really should be done today. So when you have uncertainty, you're not, it's not advisable to use normal risk. Okay. Uncertainty means you have to think about keeping risk low. So first off, we don't have a DMM for this report. Okay. The first couple of events today are no DMM. So what does that really mean? Let's really be honest. Okay. If you really want to be so honest, it hurts. Like Painfully Honest Tech, one of my favorite YouTube influencers. So honest, it hurts. There's a couple of different things going on that determine whether or not we have a DMM. My boss, who started this company, created the DMMs. I always have to convince him with a lot of convincing that a report is worthy of a DMM. Okay. He is very conservative about what he would trade and what he would allow people to take risk on. Good morning, Steve. So that's reason number one why there might not be a DMM. He may not particularly care for the report. He may not have done, he also might not have done a lot of research on that particular report. Nobody in this day and age can track every single report. You need a team of people. There's too many of them. So the second step is I have to convince him that a report is worthy of a DMM, and then we have to prove it with behavior and videos and etc. So sometimes it's not worth the effort for me to convince him, but because I've been doing this for so many years and I've been testing and trading so many different reports, sometimes I'll bring an event into the trade room without a DMM. So that's why there's no DMMs. And I might bring it into the room for us to test and learn, for us to take a micro trade, or for us to just take the risk, jump in because I think it's going to be great, and we'll do it with full risk. So that's really the truth about DMMs and why they sometimes don't exist. It's really about whether an event is worthy. I mean, ultimately, it's whether it's worthy. And, you know, sometimes you find an event we never looked at, or it's an event we used to look at, and all of a sudden it's moving. Or it didn't move for 6 months. Now it's moving again. For instance, the Bank of Australia rate statement, it went a year where it stopped moving completely. Next week, we're going to get up early in the morning for the French and German flash manufacturing reports. They were not moving for about 4 or 5 months. We took a break. They're moving again. That's why sometimes there will maybe a DMM will fall off the plate. Okay. So the reality, but you have to look at reality. You have to be honest, and you have to be, I have to be 100% transparent, because I don't want you to risk your money if it's not worth it. It's really that simple. So when I go back and look at Empire State, I don't have valid testing. We don't have August because it traded with retail. I do have July. So let's take a look at what happened in July. So here's July, gold on the left, because that's the instrument I've traded with it. Watching the ES on the right also. And July, I was willing to trade it live in July, and I got stopped out for almost $300. Okay. So that's not a great motivation to trade today, because that's my most recent test on Empire State Manufacturing. Okay. That's my most recent test. I've got no June because we had retail, all right, and I've got May. Now, May is going back, folks, before the summer. The markets are not the same. So the further you go back in your testing, the less meaningful your testing becomes. But May was a fantastic trade. Okay. So, but look what happened also. The offset was beyond comprehension. The rate cutting was it was really in the forefront. They were really slowing down the economy, and they were expecting -3 on the manufacturing, and it was -31. That was a monster offset. So it was an anomaly in the offset also. So yes, May was great, but you could see July was much more normal and more expected. And then now we also have April. And look, I have October. You could go back to 2022, right? Because I have a report, a video inside a video going back to 2022 when we were just testing in the room. 2022 is not very meaningful. It's too far away. All right. And you could also see it was a very, very slow response. All right. Back in 2022, this report was not as interested, the market wasn't as interested as it is now. But what I was saying is we have April, fairly recent, it's not great. And April had an excellent move. Also, a very, very good offset, a very, very good offset. So the truth is, further back we went, the better the testing looks. But we don't have a lot to go on because if you go back further and it works, it's less impactful because the markets are not quite the same the further back you go. Our most recent test in July was a failure. So, what you have is a report that doesn't trade by itself all the time. And you really just have to ask yourself, is this more than a coin toss? Is this more than a coin toss? And I have to say that it's not. It's a coin toss. Yes, you've got a couple of good reports going back 5, 6 months. And recent, it's been trading with retail, so we really don't know. So I have to say that I would think that most of us that have traded this week have traded profitably. Um, we had a great, great WASD. Most people had a small loser on CPI. And really, that's probably the bulk of most people's trading this week. You don't have to trade when the risk doesn't look like it's going to put a lot of money or a decent amount of money into your account. So the reality is Empire State, the wisest thing to do is for us to just watch it today. That's the honest truth. It's probably a report that, if you have a lot of money in your account and you love trading news and you don't mind coin tosses, then I have a setup for you. Okay. If that's what you want, then I have a setup. And here's my coin toss setup. And what I'll do is I'll just test the coin toss because I don't want to lose. It's not my money that I'm trading. I'm trading my company's money. And that means I have to be respectful of the account. Now, I can do whatever I want. They never, I mean, I won't say they never give me grief, but it never changes the fact that I'm allowed to do what I want. It's always, when you trade someone else's money, there's always going to be a discussion. Um, and they're always going to watch you unless it's prop accounts. And then, that's a whole other game. We'll talk about that one day soon. So here's my setup for the coin toss that Empire State is today. It's a coin toss. It's no better. 829.59 would be my activation. My bracket would be a 10. I'd rather use an 8, but it's a volatile time of day. I don't know that we'd get away with an 8 bracket on gold right after the open when it's already fairly volatile this morning. So, and you saw the ones that won. The winning trades were big movers. So, a 8 or a 10 bracket will not make that much of a difference on profits if you were going to trade it live. I would use 2 targets, and my first target would be a 7, and my second target would be 15, and my stop would be 10. It's not a big one. That would be my setup. A breakout trade, 829.59, a bracket of 10, targets of 7 and 15 with a stop of 10. And I will not go crying in a corner if this trade is phenomenal, because you have to look at what's the reality, what's the right thing to do to try and build your account. And you cannot, I don't think it can be denied that we don't have enough recent testing to know what the smart thing to do is. And because of that, you have to consider it a possible decent mover, right? Or even a possible good mover if we had more recent testing. Because June and August, it traded with retail. We don't have a way to tell what happened. All we have is July. So out of our last 3 most recent reports, it had 1 stop out and 2 unknowns. Okay. And then you go back further and you have some good movement. And that's why I've been recently interested in looking at this report. Okay. And then just to make it even more, and this is the thought process that we go through, and then just to throw a little bit of a wrinkle into today, you have import and export price index, all right, which is a smallish report that it does not usually trade with. So then some people are probably saying to themselves, okay, so why not trade micros? So yeah, micros reduces your risk. If you want to test a report live, you could trade gold micros and see how it does, understanding that the micros are not 100% exact in terms of mirroring the full size contract. There are differences in the way the instruments behave. So it's important to understand that. But I think when you look at truth, transparency, how we make decisions, how you should make your trading decisions if you're not in the trade room, or maybe you're away on vacation with your laptop, okay? You need to look at the information. You need to be able to make an intelligent decision. You have to, because it's too easy to lose money, right? It's real easy to lose money. It's hard to make money. So you want to give yourself the best opportunity. I don't need to be macho Joe and trade everything like a wild, crazy person just to prove that I'm not afraid of trading. People have seen me trade the FOMC statement. There's nothing scarier. Frankly, there's nothing scarier than trading a WASD report. The WASD report is a scary report. We don't know when the news comes out. It explodes. So, I mean, it's not fear. I'm trying to make intelligent decisions. And more importantly, I'm trying to teach everybody in the room how to make the most intelligent decisions. That's the key. That's the key. All right, let me go over the setup once more. It's a breakout trade, 829.59, bracket of 10, targets of 7 and 15 with a stop of 10. Turn off your account warnings. Okay. Account warnings enabled is off. Label, I'm labeling it Empire. I apply it. It's a good idea. Save the template and save so you remember how you tested it or traded it. Empire, gold, today's date. And one thing we will do is test the brackets. So we'll set our time to 0. Okay, it's a little wide, so there's a good bracket. Turn off the time. Turn off the enable, put the time back to 8:29:59. Apply it and okay it. And now we are ready for our gold breakout. Now, look, you could also try to maximize your testing, right? A lot of people like to trade the ES. A lot of people like to trade the NQ. You could set up an NQ trade, for instance. I'm looking at NQ 1223. I would do the same breakout 829.59. My bracket would be somewhere between 15 and 20. So let's try a 16 bracket on the NQ, and we'll do targets of 10 and 22 with a stop of 22 on the NQ, which is not a very big stop. Strictly just a test, have not done the NQ on this, but this is how you start. When you have an event and you're not sure how to trade it, that's a starting point. You always need a starting point and then save it always. So NQ 829.59, bracket is 16, targets of 10 and 22 with a stop of 22. Label it NQ. Okay, it gets labeled NQ. Again, save that template. Empire, NQ, today's date. Apply it. Check those brackets so you can analyze your trade. Make the time 0. Apply it. Okay, that's a very good bracket size. Now remember, this could be a decent trade. It's possible. Why are we not doing it? Because it's a coin toss. All right? It's a coin toss. One other thing that we do is we always test our time sync, right? By going to the website time.is. Time.is. And you see it checks to see if my computer is in sync. Okay. So I do want to thank everyone that's watching us on YouTube. We are streaming this live. So if you want to hit that like button, that would be nice. So everybody understand why you might take a trade, why you might not. We might sometimes go through a whole day where we won't take a live trade. And all we'll do is educate. All we'll do is educate. And there's nothing wrong with that. There's absolutely nothing wrong with that. Now, today, no matter what, we will trade the NOPA crush report. That's our challenge event. at 11:30. And we also have a couple of other events coming up that we'll discuss, and we'll make intelligent decisions. So now we're just watching the market. The gold market opens at 820. Not a super big move. You do have gold has been making new highs this morning before we got here. Sometimes that can affect the instrument. Gold loves, all instruments love testing their highs and lows. The NQ, now we're getting close to the trade, but when you right click a chart and click data series, trading hours is a template. The default is use instrument settings. And what that means is your pivots and your highs and lows are calculated from 6 p.m. the night before. This is strong support. A low of the day and a PP, central pivot, is strong support, and price also gets pulled into those levels. It's just something to understand about pivots and highs and lows. When you see the PP sitting right next to a low, there's a better chance price is going to pull into that at some point fairly soon if the price is close to the level. It's just something to keep in mind. Sometimes what you'll see is a burst right to that level and then a change in direction. When a report might not work well, depending how far away that level could be. That's exactly what happened to us on CPI this week. On bonds, I had said right before the trade that I was a little bit worried about, not worried, I was pointed out that right above us, we had the high of the day on bonds. I think also there was a pivot level, and exactly that happened. Bonds burst to that level plus like 2 ticks, didn't follow through, and that's what ruined the PPI report. But fortunately, we had really recommended that most people don't trade the PPI report. It was a high margin event, and the broker wouldn't let you trade it with too many contracts anyway, unless you had quite a bit of money in your account. All right, so the news is going to come out. I'm just going to watch the NQ. I'm not going to do anything with it. Gold has been the instrument of choice on this event. Now the NQ, what's really interesting, just watching. So look, if this were live, I would be thinking about trying to protect my profit if price action would keep moving towards the target. Okay. It would keep moving towards the target. Obviously, right now it's not. Up at the top, you have a break even button. If the price should go to break even entry, this black and red box, if price should go there and stay in profit, you can hit the break even button and it'll move your stop immediately to break even. Now, you're not getting cooperation from gold that if you traded it the way that I traded, you would not have had the opportunity to get out with a profit. And look how slow the news was also to become public. Doesn't mean the market didn't know these results, but it was slow being released publicly a little bit. Okay. So what you have here is they were expecting terrible news, or let's say bad. They were expecting bad news, -10, and they had very good news. They had very good news on Empire State Manufacturing. That pushed the price down. Now, what's interesting, it also pushed the NQ down. I wasn't even, the NQ, folks, was an afterthought, total afterthought on this report. Was not planning on trading it, was not planning on trading it. The break even button, very top of the chart, BE next to combine at the very top of the chart. The break even button is only available if a trade is enabled. If a trade is enabled, okay? If the trade's over, the break even button is not going to do you any good anyway. So these trades are over, so we disable them, okay? And we look at the video to analyze what happened. So before I even say anything, let's look at the video. So give me 1 second. The news, if you look at the news, what happened with the news, it was New York Empire State, much better than expected. Much better than expected. Import and export pricing, there's no forecast for the year over year. All right. It's less negative. The index is less negative than the previous. All right. And the monthly for August is better than expected. Now, does that mean higher prices? So that's a report I'm not super familiar with. So you have to do a little bit of research on that report so you understand what the news means. But ultimately, what it means is only useful when we analyze after the trade. We don't really care what it means. What we care about is, was there a tradable move? Was there a tradable move? What has meaning, what does have meaning, is if the trade lasts long and our trade was not over immediately and the news comes out before you exit the trade, then the news can have a bearing on the actual trading that you're doing. So clearly, when there are reports and you are trading live, you should research the extra report so you understand what the news result might do to the instrument you're trading. Is it good news? Is it bad news? And analyzing news today in this market environment is trickier than it's ever been, because sometimes bad news is good news and sometimes good news is bad news. Understanding the Fed interest rates, all of that complicates news analysis. Notice on the NQ that that magnet trade was a winner. What's a magnet trade? It's a trade that gets pulled into a magnet, and PP sitting with the low of the day is a magnet, okay? So a lot to digest here in just a silly little report, right? A lot to learn in a very silly little report. And let's let our YouTube friends listen to the analysis of the video, and then we'll say thanks for joining us. Z is asking what the combine button does when you have two open orders, more than two open orders. If you press the combine button, it will combine the orders into one using the closest order to the current price. It combines the positions into one position, and it uses the closest order to current price. Why might you want to use the combine button? I particularly designed it for when a trade was difficult. It made it easier to combine the orders and get out of the trade using trade management rather than just hitting the close button. So it's a trade management feature. And let's take a look at this video. Give me 2 seconds. So the irony of ironies on this trade, and this is how you come up with setups. I can't tell you that there's nothing more important than testing. But here's the thing, you don't want to drive yourself crazy either. If a trade is never going to trade the same way, then what's the point of spending all your time testing it? You don't want to do that, okay? So folks, we're going to analyze this, and then our cleaners are here. So give me 1 second. Okay, so we're going to analyze this pretty quickly, and then I'm going to go and we'll be back about 1/4 of for the next event. So here's what happened. Watch gold. Watch gold. Gold's going to burst down, hit the first target only, and then pull back. That would have, in real life, filled that first target. That's definite. Did you have time to get out of gold? You could have gotten out of gold right in this whole area here and protected your first target. So I would call that a target one winning trade on gold. Okay. You could have gotten about 7 ticks. On the NQ, the question is, was it too fast to hit the targets? Watch. No, that was a perfect NQ 2 target winner. Perfect. Okay. So what have we learned? We learned that gold would have been possibly a 70-ish dollar profit. Okay. The NQ, which was just the first time I've tested it, absolutely requires more testing. When Empire State trades by itself, and the reason I say by itself is because this news appeared to be late, the import. I think the market was responding pretty much to Empire State, and the NQ looks like a valid instrument to keep testing and or trying a trade. If Empire trades by itself next month, I might be willing to give it a shot. It would be still a coin toss, but looking at its behavior over and over 9 months, 10 months, it seems like it's a little bit better than a coin toss. It might be worth it. Okay, so you take all the info, and that's what gives you the decision-making process for the next time. So listen, I'll be back in 10 minutes. My cleaners are here, and I have to just let them do a quick clean in our office, and then we have capacity utilization. Everybody could stay here, but we were planning on having a 5-minute break. It'll probably be closer to 10. Okay. So sit tight. Everybody could stay here, and then we'll be back for Empire for capacity utilization. So I'll be back.